As we close out 2020, the Federal Open Market Committee has one more meeting. It begins today. It's a two-day meeting, as it tends to be. Our Brian Cheung, as always, is watching that meeting and, in fact, has three things that he is watching for. Brian?
Well, Julianne, as always, that announcement will come tomorrow, although the meeting does begin today. But it's the last meeting of the year, but it should be a pretty interesting one. So here are my FOMC my three big questions heading into tomorrow's policy announcement and press conference. And first off, at number three, will we see a collaboration between Jay Powell, and Biden's pick for Treasury Secretary? That's Janet Yellen. Obviously, we know both of them have a working relationship from their time at the Fed. Would Powell have anything to say on how he might work with the Treasury Secretary Yellen, or maybe the extent of their existing relationship? Markets will be very interested to be tuned into that. And number two, the big question that Fed watchers are really dialed into is what's next for quantitative easing, their asset purchases. Right now, they're buying about $120 billion a month of mortgage-backed securities in addition to U.S. Treasuries. So the question is going to be, what will the Fed do next? The expectation is for them to offer more forward guidance, but the Fed might use its words, not its actions, merely signaling that it could adjust its purchases depending on what the economic conditions look like, but not actually change anything about the pace or the duration of those purchases, at least in tomorrow's announcement. And then number one, really the top thing, most people really aren't Fed watchers. They're not dialed into the nuances of QE. So the question is really going to be the economic outlook from the Federal Reserve, the nation's top economists, right? Is the upside from the vaccine at this inflection point greater than the downside from the surge in virus cases? Obviously, here in New York City, for example, there's a threat of full shutdown, at least coming from the mayor. That could really have a huge impact on a lot of the businesses in this area. And that's the case in many other corners of this country as well, with the cases surging. So a lot of things to kind of watch out for as we get that summary of economic projections, which will really plot out where we might see real GDP changes or employment or inflation in the future. But I know, Miles, you're also going to be dialed in very closely. If you could ask a question, or if you kind of had something you were dialed into, what are you looking for?
Well, I think it's certainly the SEP, Brian, and I'd specifically drill down on the GDP number. So in June, the Fed was looking for 5% growth in 2021. Then in September, they started looking for 4% growth. That was certainly in response to the summer surge that we saw. But now, in addition to a much larger, significant wave of COVID cases, we also have these vaccine developments. And Brian, as you know, and everyone here on the program knows, Jay Powell has been very cautious with respect to how much the economy can grow and succeed with the virus continuing to spread, which is very much in tension, even more in tension now than I think it's ever been, with how investors are viewing the current moment. I mean, we've heard from Goldman Sachs, for example, is looking for 5.3% growth next year. And I think a lot of their peers, maybe not in their official forecast, but you talk to people on the street, they think that is way conservative. You talk to some people say, oh, it's going to be 7%, 8% GDP growth. And obviously, that's in response to the depressed growth we're going to see this year. But I think upside scenarios continue to be the more talked about situation with respect to 2021, whether that is for what happens to equity prices, whether that's what happens with GDP growth. And I'll be curious to see if Powell starts to change his tone a little bit, because, Brian, as you know, he's been very cautious with really having much at all positive to say about the economic rebound in the last couple of months.
Absolutely. I mean, that was the tone that we had heard from the chairman when he testified to Congress on December 1st and December 2nd about 2 weeks ago. And something that was very interesting was that in his prepared congressional testimony, he said that, yes, the vaccine does provide an upside. There's no other way to frame that, but that there were still questions about the distribution and the efficacy of the vaccine. I think it was MUFG's Chris Rupke, I think it was. It may have been someone else who was remarking that that type of commentary was very bizarre from the Fed to say, yeah, I mean, there could be some right side tail risk of the vaccine coming out, but we don't really know if it works. Well, it's not really the Fed's place to be opining on the efficacy of the vaccine. We've heard many times that they're economists, right? Not epidemiologists. So I think that the Federal Reserve, that type of example there underscores how cautious they've been trying to, create their messaging, if you will. I think that's something that also the Fed chairman will kind of have to balance again in that press conference tomorrow at 2:30. Something very interesting to watch the Fed chairman talk about again as we head into that announcement tomorrow.
Brian, is this the meeting where the Fed chair starts to get questions from media on his future plans? Certainly, he's not going to be getting a pink slip anytime soon. But is this the meeting where he'll start to get probed on where his head is at?
Well, I've certainly got that question on my notepad over here for tomorrow's press conference. Now, the one thing that we do have to remember is that, yes, it is indeed the case that the administration is going to change, but that doesn't necessarily spell an immediate pressure on the Biden administration to replace him. And the reason why that is because Fed Chairman Powell's tenure as the Fed chairman doesn't expire until February of 2022, which means that really the incoming administration would have the entirety of 2021 to strategize what they want to do there, if they want to renominate him for another kind of 4-year re-up at the Federal Reserve, or if they want to replace him with someone else, for example, Lael Brainerd, who, because she was passed over as Treasury Secretary, now remains as a Fed governor. So that could be kind of, there are a lot of moving parts there, but again, there's no immediacy, at least in the first 90 days or 120 days of the next administration, to really start to think about that question.
And one more thing that we haven't really delved into is Jay Powell's history of comments this year on fiscal stimulus as well. You know, we keep talking about getting closer and further, and who knows, but undoubtedly he will have a few choice words, continue to have a few choice words for Congress to say that they need to get off their duffs and get something done on that front. Not that it's motivated them so far. So we'll see if it's going to make any difference in that way. All right, Brian Cheung, thank you so much. Yeah, go ahead. Sorry, Brian.
No, I was just going to say, especially with that negotiation going down in Capitol Hill, that's going to be a very big question in that press conference tomorrow as well.
Yes, most definitely. We're looking forward to that tomorrow and to see what indeed Jay Powell has to say and whether the FOMC 3 come to pass. Thanks so much, Brian. Appreciate it.